Hello, good morning, everyone, and welcome to Season 2, Episode 1 of Building from Ground Up. We're very, very, very excited to have you all here with us. Thank you for tuning in. Thank you for registering. And we're just really excited to speak with who we have here today, our guest today, who is the CEO of Autocheck, Mr. Etop Ikpe. I said that correctly, right? It's Etop. Yeah, I said that right.
Yeah, sure, you did. Yeah, that's fine.
Okay, great. Thank you so much for joining us this morning. So we just want to share some housekeeping rules so that everyone understands how this works. This is building from ground up. Some of you may know us. Some of you may know our event, Tech Cabal Live. This is not Tech Cabal Live. This is building from ground up, and it's powered by the UK Nigeria Tech Hub in partnership with Tech Cabal. Tech Cabal is an implementing partner. The Building from Ground Up series seeks to bring together founders across the Nigeria and UK tech ecosystem to share their stories of building and scaling. This series, like I said, is powered by the UK Nigeria Tech Hub. The UK Nigeria Tech Hub works to stimulate local digital economies, support inclusive and sustainable economic growth and jobs, build high-end digital skills, and forge innovation partnerships between Nigerian tech sectors and international businesses, which will eventually lead to more trade and investment in the longer term, thereby driving increased productivity and growth. So we're really excited. This is Season 2. In the past, we've had some really great guests. We've had Dr. Ola Brown. We've had Shola from Paystack. It's really, really great conversation that we're going to have here. And yeah, we're so excited. So I just want to let you guys know who is on the call with us. My name is Koromane. I am Tech Cabal's managing editor. Our chat room moderator is Timi Odueso. And he will be, I think he's already put a message in the chat box. He's just going to be helping everyone understand how this works. If you have any questions, he will let you know where to put them. This event has been wonderfully coordinated by Bolutife Sanwo and Eniola Susan. They both work for Tech Cabal Insights, and Tech Cabal Insights is the brains behind some of the events that we plan at Tech Cabal. So yeah, thank you again for joining us. Okay, so Etop, I'll allow you speak. Sorry, just like getting used to your name. I'll allow you speak and introduce yourself and just say something brief before we jump right into the conversation.
All right, thanks, Koromane, for having me on the program. Excited to be here. My name is Etop. I'm the CEO at Autocheck Africa. We're automotive technology company that focuses on accelerating affordable credits to people who want to basically be able to purchase vehicles. So yeah, super excited to be here, ready to go. Very proud of what you guys are doing, and yeah, looking forward to the rest of the show.
Okay, fantastic. Okay, so before we actually get into asking you some questions that we put together, I'd just like to share a bit more information about you and about what Autocheck Africa is doing for the continent and for the automotive and automobile industry. So Autocheck is an automotive technology platform designed to facilitate auto financing across Africa. Mr. Etop, who is here with us, is a seasoned entrepreneur. He has been at the forefront of digitizing the auto loan process by leveraging technology, data, knowledge, and experience. We know that technology is super important now. It is growing at a fast rate. We're in the middle of a digital revolution right now, and what everyone is talking about when it comes to technology on the continent is usually financial technology. But today we have something a little bit different, which I'm really excited about. Autocheck focuses on solutions that improve quality maintenance and after-sales access. This enables car buyers and sellers to access convenient and innovative mobility solutions in Africa. Before coming on board as CEO of Autocheck, he's previously served as a CEO at Cars45.com, an innovative technology platform. Under his leadership, the company expanded into two other African countries, Ghana and Kenya. And he was also previously CEO at DealDey.com, Nigeria's largest discount store. Autochek was founded in 2020, right, I guess, the year of the pandemic, and he has overseen the company's rapid expansion across 5 African countries. We get a clap for that because expansion is not an easy game at all, especially expanding into other African countries. Can you hear me clearly? Can you hear me just fine? Okay. Just want to be sure. Yeah, so Nigeria, Ghana, Uganda, Kenya, and Cote d'Ivoire, really exciting within 1 year. Autochek has a partner network of over 1,200 workshops and dealers and over 70 financial institutions on the platform, approving and dispersing car loans across Africa. So in addition to expansion, obviously we're seeing partnerships at play here, which is something that I would like us to talk about. I know that whenever we're thinking about growing and scaling a company, you're thinking about scaling into other countries, but you're also thinking about bringing on board the right partners to help you grow. Yeah, so we're really happy to have you on here. Thank you so much for joining us. So my first question for you is, how did you birth the idea of introducing a car dealing business? And what can you tell us some of the difficulties and challenges you faced along the line?
I mean, from what you described, I mean, we had been, you know, I had, although I've been kind of, I've come across digitizing a lot of different marketplaces. I've done fashion, I've done general merchandise, mobile, and my foray into typically automotive was just out of experientially, right? Having had to go online to search for a car, buy a car, I realized what the challenges were. And you know, the sector is just super massive, right? So important to a lot of people. And it was very clear that, you know, if we kind of focused on auto, and it was one of the areas that really were not getting any attention. I kind of like large problems that can be solved. So in terms of how we're thinking about it, it had to be something that really was large enough that we could build sort of a Pan-African opportunity. So we knew that the problems were similar across a lot of African countries. We like the fact that it's also high value, high volume, and high velocity. So those 3 factors typically make it worth waking up every day, right? Because you can really build a huge business out of that. Now, in my previous life, we were more transactional, not necessarily focused on finance. But as we delved deeper and deeper into the market, as we did more research into the market, as we scaled the business, we saw that there was a fundamental gap in financing. So if you look at, for instance, an emerging markets average of institutional credit into automotive transactions, which basically is how many people basically buy a car through the use of loans. So if you look at emerging markets like Brazil, China, well, maybe not these days, China not anymore, but Brazil, India, Indonesia, large parts of Latin America, Malaysia, you know, countries like that. Basically, you find an average of about 65 to 70%. But across most parts of Sub-Saharan Africa, that average is basically less than 2%. So if you look at the GDP per capita, which is, you know, just sub $2,000, the average car price about $5,000, you realize that, you know, where there's actually a need for credit is in Sub-Saharan Africa. And digging into the industry, we realized that we could see clearly where the problems are around the fact that it's not like the capital wasn't there. It's not like the cars weren't there. It's just that there was nobody that was supporting with any kind of intelligence around valuation and condition analysis that basically helped the providers of capital to be able to confidently deploy credit into the sector. So we realized that, I mean, if you look at that less than 2% average, and the confidence is that we can build this to be able to get something like 50 or 60% over the next 5 years, you realize that, one, there's a huge opportunity for growth, plus there's an overall residual impact on the entire ecosystem, right? Where typically with that sort of low credit penetration, there's an overall lack of productivity across the board. People are working hard, but fundamentally their productivity is not maximized simply because of the lack of access to credit. So beyond our benefit as a business, there's a larger benefit it has overall on people. And I think for us as well, there's a big thesis that we have around transportation poverty and how important it is. So if you look at typically how important mobility is for people to being able to access, you know, better job opportunities, better business opportunities, better health, better healthcare. And you look at motorization rates across the board, and it's not a fluke that across developing markets, you have very high motorization rates, meaning that people have access to mobility, and access to mobility fundamentally helps you get better opportunities. So low motorization rates fundamentally leads to transportation poverty, meaning that overall, it's so important that people can be more productive through access to better transportation. And so that for us, it was very clear that this was really a worthy goal to basically pursue. And I guess that's sort of our transition into why we're doing what we're doing.
Great, thank you. Great responses. Love what you said about productivity being affected due to us not having access to certain things. That's really great. So can you share some lessons that you've learned along the way? Obviously, being a part of not just at Autochek, but even the other businesses where you've overseen growth, where you've overseen expansion. What lessons have remained constant in all your years of building since you started?
I think the first thing is basically being dispassionate about the idea. And what I mean by that is basically you have to be very objective and data-driven when you're kind of analyzing the opportunity. A lot of times you're very convinced as an entrepreneur around an opportunity being there, and it's important to listen to that sort of inner, you call it that inner mojo in you, right? That says yes, there's an opportunity here, but you have to spend quite a bit of time really analyzing what the opportunity is and segmenting if you should actually even pursue this or not. The second thing is for me is the response to the market. So a lot of times we're so convinced by our idea that we expect the market to react in a certain way. And if the market doesn't react in a certain way to our product, we assume that the product doesn't work. And we are usually too slow to adjust our product to achieve product market fit. And that process of achieving our product market fit is pretty much challenges and problems. So how we respond to challenges and problems is very key to how successful you're going to be. How you respond to consumer complaints, how you listen to what the market is saying, not necessarily assuming that the market isn't using your product very well, but taking a more, I would say, humble approach to understanding that maybe my product just isn't the right fit for the market, and then listen to the market to be able to adjust your product. The other thing is the importance of a team. So investing in the right people, being very vested in their success as well. So it's not just about the success of the business, but really taking your time to ensure that over time, as you build the business, you ensure that people that are building the business along with you are adequately, one, compensated, two, there's a clear-cut plan for their development, right? I think if you have a vested team in your progress, the sky is the limit. So I'll say that some of those are the key lessons that I've learned.
Just ask, what would you say the role of having the right team or building the right team? What kind of role has it played in helping Autochek expand into the other countries that they're currently operating in now?
Absolutely everything. It's impossible if you don't have the right kind of people that are committed. I think even from a market exploration perspective, so for instance, we have an individual who basically leads that, very different from a lot of the other people. So looking at people's personalities, understanding how basically important various roles are, regardless of visibility or anything like that. But I think that having a right team means that everybody kind of knows what they're doing. Everybody is invested in what they're doing. Some might be more visible than others. Some might be more larger than others, but everybody's kind of connected in a way where we're all working towards the same, a common goal, and everybody's vested in the entire, in the overall progress of the organization. So that means there's a very cohesive approach to how we work and how we develop things. I think the team is so important. It's like the most important thing. Having the right kind of people in the right place is everything to being able to expand. Because, as a CEO of the company, there's just, I personally, I have very limited information to certain things. And so you have to rely on people's ability to execute on what the company's goals and ideals are, and also feedback and being able to represent the company's culture and belief system amongst other individuals, even when you're not there, means that there has to be a very cohesive understanding around what are the core values that we hold valuable, and how do we ensure that these core values are really distributed across the organization.
Great point. Great point. I just want to just jump in here and say, I see some people have their hands raised, which is fine. We do want to take one or two live questions, but I have two asks. One, you have to be in a place where the background is not noisy. Like we don't want to hear any noise. And then two, if it's possible, please turn on your video so we know that we're not speaking to a robot. So I'll allow Timmy just kind of make the decision on who to bring up first. So please just check with them that they're able to speak, and then send me a nudge and I'll bring them up. But I just want to get into some of the other questions we have here. So can you tell me, when it comes to expanding into other markets, right, can you let me know what it's like interacting with these different African countries, right? A lot of people say like Africa is not a continent, but in some ways, when it comes to business, we do have similarities, right? So can you share some of the similarities that you've seen in these other African countries that Autocheck is operating in currently, and what differences and some very glaring differences as well when it comes to doing businesses here versus in all these other countries? Can you hear me? Okay, I think. Okay, can you hear me now? We can.
Yeah, I can hear you. Yeah, just for a second.
Yeah. Okay, so yes, I was asking, can you tell us some of the similarities in doing business here in Nigeria versus in the other African countries that Autocheck is operating in? And then can you let us know some differences as well with doing business in these other countries versus doing business here?
Okay, so I think one is that I think we're extremely blessed to have the opportunity to actually be able to, have a product that really cuts across the board. It's opened my eyes a lot to great opportunities and various cultures across the board. I think that, I think the biggest difference I would say is that I think in Nigeria, the environment is a lot tougher, and it's actually like super reversed in a sense where you find that there are a lot of things that are, I would say, more, power, infrastructure to a large extent, and just sort of the environment in itself, right? And I would say sometimes the kind of government support that you get. In a sense, it's not necessarily bad, because I think that Nigerians kind of forces Nigerians to be a lot more, aggressive in a sense about how they do things.
Yeah.
They're reliant on what's available. They just want to succeed regardless. I think that other benefit, something that surprises a lot of people is just the amount of quality talent that's available out there in various forms. I think it's highly underrated how much quality there is. I think something that's also very key is just how quickly these African countries are growing. If you look at across the board and the rate of development across most of these African countries, it's just impressive to see sort of the level of development, how things are evolving so quickly. I would also say sort of like the technology adoption, across the board is also similar in terms of, people basically relying on technology a lot for a lot of things. I would say that those are sort of like the core similarities. And I think differences, I just discussed differences. I think differences are more cultural, and there's a perception around how people, I think in some markets you find a situation whereby people are, you need to build a high level of trust. It's a trust-based market. I think some other markets are where you need a lot more clarity around product description and product use. So you might not find a lot of, I would say, DIY process whereby consumers just pick up an application and they know how to go through the entire application and enjoy that process of doing that. In some markets, you have to be a lot more descriptive about how it works. In some other markets, you also have to be patient. Some markets are, people basically are not as adaptive as other markets would be. So in some markets, it's not necessarily because your product doesn't work that well. It's just a market that relies a lot more on word of mouth for a product to begin to achieve scale. So I think that, and I think one big similarity across all these African cities is traffic. Everywhere has traffic like Lagos. So that I just have to mention that as well. So yeah.
Yeah, sorry. Yes, sorry about that.
Okay.
Yeah, I love the comment about traffic because hailing apps, motorcycle apps are becoming more, I would say they are becoming more widespread, especially in East African countries. So I know that that's definitely something that a lot of founders are starting to take notice of. So thank you for sharing that. Good to know that. Where resilience, where talent, where innovation is concerned, I know that Nigerians and even a lot of other African citizens, that's something that drives us. That's something that plays a role in how we do business. So good to know that at least we share that. So let's talk about our growth goals, right? Autocheck's growth goals. Tell us how you guys were able to, as a team, work together to achieve those goals, right? And what does the next 5 to 10 years look like? Because I know that every company always starts off having a mission statement and a vision statement, right? So in terms of goals, which is like happening right now, which you're working to execute every single day, so tell us about that. What do you guys do when it comes to implementing, even coming up with goals? How do you guys go about it? and then talk to us about the vision for Autocheck Africa.
Okay, so I think, you know, from my experience, right, one of the key things to being able to scale an organization is basically the ability for what you call founding team members to really be able to transfer, or I would say, quantify whatever the ideas are and translate these ideas into specific steps that the rest of the organization can understand and can implement on a daily basis, right? So what you want to avoid is a situation whereby, you know, sort of what the top team or whatever it is have ideas, and those ideas are not very clear down the line, right? Then you can't move as an organization in terms of everyone having clear goals. And you know, it's something that I've learned over time. And basically, how we've come to learn to design that is to, first of all, ensuring that we have a very clear-cut strategy. At an early stage, yes, we have a dream of where we want to be at, but you have to really bring that dream into very granular, implementable steps. And what I mean by that is basically, first of all, we have very strict, a very strict approach to how we plan our strategic sessions, which we do on a quarterly basis. These strategic sessions basically are designed to define the strategy and tactics we're going to implement every quarter, and we all agree to basically exactly what those goals are going to be. Those goals are then translated into sort of, you know, numbers, financial outputs, basically, and basically what that translates down the line. And then we then cascade that down to every single individual so that everybody is basically keyed into those goals. And so everybody, you can say the overall goal has then now been granularly modified to ensure every single individual in some way or form has a specific input that they also have to achieve. So basically, it's very clear to everyone that if everybody is not going, we don't have a larger average hitting 80 to 90% of their own personal targets, the organization can achieve that. And we're also very clear about the fact that in some cases it's unfortunate, but we love the fact that we're an organization where we're fragmented in a sense where you don't have one person succeeding. Everybody has, it's a fine chain reaction, right? So everyone has to do their part and hand over to the next person. So it's important for us to have a very cohesive approach and a good understanding around how everyone works. So basically, you know, being able to translate whatever our goals and strategies are down the line, turning that into KPIs, and then having very clear quarterly review sessions and performance appraisal sessions where we're able to provide feedback down the line to people who are performing, reward great performers, ensure that people who need help get the right kind of help, and also refine the strategy. So we do that it's quite tasking, but we found out to be very effective in terms of how we set our goals and how we implement our goals. So everything basically boils down to granular steps that everyone understands, and ensuring that we're on a regular basis coming back to review and ensuring that we're providing feedback where it's necessary, providing the right kind of support where it's necessary. And if there are new things that we need to introduce, or things, for instance, that we need to dial down, those are the strategy sessions whereby we decide on those things and determine what the cost for the next quarter is going to be, especially at an early stage like this for us. Our next 5 to 10 years really are, for us, our broad vision is really around improving access to credit, right? So we're very clear around what the percentage is today. And, you know, it's really about the partnerships that you mentioned earlier on, how many dealerships typically are now able to, you know, provide affordable credits to their consumers, how many banks we have on the platform that are disbursing more loans, and really building that sort of system whereby overall, more and more people are basically being able to gain access. And for us, over the next 5 to 10 years, we want to be the company that really has helped, you know, a larger percentage of the population. So we want to be able to grow that average from around 2% to at least 30% over the next 5 years. And that's a lot of people basically that we're moving into the bucket. We understand what the residual impact is going to be, and that is a core goal for us.
Great. I was actually gonna just pop this in there. So you mentioned that Autocheck is in its early stages. Do you really consider Autocheck as an early stage, or do you feel like you guys are more scale up now?
So I think we're early stage, and there's something we talk about in the organization a lot, right? When you're building a skyscraper, everyone starts at the foundation, right? So if you're all on one line, if everyone that's building, we have all people building different buildings, we're all on the same line. When you're starting out building a skyscraper and you're starting at the foundation, someone who's building a 3-story building or a 2-story building next to you, you all seem like you're on the same level, right? But knowing what you have to do or knowing where you're going to, if you're building a skyscraper, is very different from someone who basically is building 2 floors. When they build the first floor, they are 50% complete, right? So there's a sense
Yeah.
of achievement, but we are very clear about what we're trying to build. We're building a skyscraper. So for us, we're very early in terms of what the opportunity is. And we understand what the journey and how far away we are. So yes, we do consider ourselves as a very early startup, very early stages of the business, simply because of what the opportunity is and how early we are and how much more we have to do to get to where we want to get to.
Okay, great. Thank you so much. I like the skyscraper analogy, and you're right. If that's how you're thinking about growing the business, then it makes sense to still consider yourself early stage. That makes a lot of sense. Okay, so I want to jump into the Q&A box and just pick out a few questions. I just want to make it clear to everyone on the call that we will not be taking questions about Car45. So just don't even think about putting it because we're not going to take them. Okay. So someone has a really good question here about fluctuating FX rates, and I think that's really interesting. So this question is from Mohammed. Mohammed, he says, how do you deal with frequent fluctuations in FX rates and indeed the lack of FX at when needed? And he is writing from DealDey Business School in Kano. Great to have you on the call, Mohammed. So yeah, what are your thoughts on that? Obviously, it's a serious issue and something that I know will affect your business model. So how do you guys handle this lack of FX, or even when the rates fluctuate when they do?
Okay, so I think first of all, just to point out that FX fluctuation is a very Nigerian problem. So across the board in most of our markets, the rates are, currency fluctuations are not very heavy. And I think before we get into that, it's really helping. I would like to just contribute around, we have a lot of theories around this, but I think that, look, so if you look at sort of like Q3 statistics on our trade deficit as a country in Nigeria, exports have grown so Nigeria is currently in its highest ever, in terms of non-oil exports, we have a record growth. Quarter on quarter, year on year, it grew at 71%, right? 71% in terms of exports, non-oil exports. But at the same time, imports basically grew at 51% quarter on quarter, right? Sorry, year on year. And so basically what's happening is the fact that, and it's important everyone kind of understands this. So we have, when you talk about a large, young, growing population, we have increasing consumption, right? This young population I've been talking about is getting older. Younger people are having families. And so naturally the consumption base is growing. And what that means is that there's a lot of demand for various products and services, right? And what basically is happening is that as there's a high demand for these products and services, we simply are consuming more of things. And as an import-dependent nation, we have to bring in more of things that we need to consume. Now, it's a deadly spiral because it's almost like you're creating jobs for other countries. And until we get to a point where we are consuming most of what we are manufacturing most of what we're consuming, we will never get out of so there's no magic to how we get out of the FX rates, simply because we have a large growing population that is consuming more and we're import dependent. And until we begin to consume more and produce more of what we consume, we will have a large dependence on foreign exchange, right? And it's quite, because we have such a large population, it will continue to happen, which is why, and basically, this is where you find a lot of problems with the FX devaluation. Now, our business particularly is one that is largely affected because about 90% of the cars that are sold in the market are typically imported into the country for sale, meaning that every time the currency is devalued, there's an increase in price. Increase in price means that there's less affordability because we're also not seeing income grow. We're also not seeing incomes grow at the same level. We're also not seeing job creation being made at the same level. So it means that there's less and less affordability, which is why also credit is important. But credit is not a solution because as long as credit is not just a solution, yes, it creates affordability, but we have to have some level of price stability and some level of local manufacturing. So yes, it's a big problem. It's largely out of our control in terms of that's why I described the overall issue, and we're very big supporters of local manufacturing. We believe that if vehicles can be more and more, we started with assembly, but the reality is that if you think about the amount of cars that are consumed or the amount of cars that are purchased every year, and if those cars could typically be produced locally, that's creating a lot of jobs. Now, a lot of people typically will not be able to afford what you call brand new cars simply because of the affordability, because of a lack of credit. So if we don't make more affordable single-digit rates with longer tenures that make it affordable, it doesn't support the local manufacturing industry. So it's a larger problem in itself. I think that, we're seeing a lot of steps. Like I did mention, not all exports are at its highest level. We also need a lot more people getting involved in businesses like that. It's actually quite lucrative. And I think that, as a business, yes, we do suffer from that because it eventually affects the price that we have. But just like anything, now prices get higher and, affordability. So it's a larger problem that has to be solved really from a monetary and fiscal policy standpoint. I think that as a business, the best thing we can do is to de-risk by existing in other markets that are more stable. But of course, Nigeria is a large market and Nigeria has to do well for us as a business to do well. So even though we're hedging by ensuring that, we are evenly spread across multiple markets, it still is important that it works. So I think really how we support our fiscal policies and monetary policies that encourage more and more production of local consumption-based products is very key as well.
Great points, really great points. And I like that you also provided insight into what the other markets look like and how this FX fluctuation is a Nigeria problem, not so much something that we're seeing in other African countries. So I do want to ask a question about, because you've talked about how most Nigerians don't purchase new cars due to affordability, right? And you guys there's just an announcement that has come out about Autocheck beginning loan services for brand new cars. Can you talk to us about where this idea came from and why it's important to not just your business growth, but also to your consumers as well?
Okay, so I mean, it's a demand thing, right? The fact that we don't have a lot doesn't mean that, one, we have a large population, and across our markets as well. There's, for instance, there's the fastest growing brand new car market in Africa is in Cote d'Ivoire. Kenya also has a very fast brand new car market that is growing. One of our investors is the Toyota Social Group, which owns CFAO Group, which is the largest automotive distributor across the continent. So all these opportunities basically are around us in terms of how can we apply vehicle financing to basically make it more affordable to people, right? So there is a segment of people that is with financing without financing, you don't have a place where they can actually go to look at various options. So that's one, is just in terms of where can I go for pricing and assortment. The second basically is that if there was credit available, would this increase purchase by 20%? Yes, we believe it can. And that's why we partner with a lot of the OEMs to make brand new cars much more affordable because we're making access to credit better. Now, we believe in a very graduated system to improve. We don't think that you get to nirvana overnight. If we can improve by 20%, it's easier to get all the players onto the table to say, hey guys, look at how much we've improved by. What if we added this to take it from 20% to 30%? We come back to the table again and we talk about how we can, and that's typically how you build a roadmap to make things much more affordable across the board. And so that's why we've taken this direction. We believe in this direction. We believe that this is the future for Nigeria and the rest of Africa. But if someone doesn't pick it up today and start working on it, we're never going to get anywhere.
Yeah. So it's a matter of access, not just to credit, but even to new cars, right? Because what we're used to is you just buy it secondhand and you buy it at once. But now there's an option to actually, finance it and own it at some point, I'm guessing, right? Is there room for that, for ownership? Or is it just more of a how does it actually work, this loan services, right? How does it work? So if I was interested, how would it go?
Yeah, basically you have two options. So you can walk into any one of our dealerships, or you can walk into any one of the OEM dealerships. If you walk in there, each of them are basically using our solution and software. We're actually launching one partnership today officially. There's a big event that's happening somewhere in Lagos around that. And basically you'd walk into them, or you can go on our website, go to the brand new segment on our website. You'd see various stores. And these stores basically represent the OEM. So you see the Toyota store, you see the BMW, various brands like that, and it depends on the market that we're in, right? So when you go into those markets, you see the cars that are available, and you can start your loan application online, or you can start your loan application in the dealership location. Once you've completed your loan application, your application basically would go to, depending on the market that you are, any one of our banking partners on the back end, who would then send you a loan offer for the car. They will, based on your credit assessment and what they basically looked at you, they've gone through the underwriting process. They will send you, so you might receive as many as 10 different offers for one application that you make. Once you pick the one that you want, we typically move you to a stage of disbursement where You then work with the bank to, we then help you sort out everything that needs to be done around the bank. Your car is registered, it goes into a management cycle, and it's disbursed, and you pick up your car and go. It's that simple.
Oh, I feel like maybe I should try this out myself, you know.
You should.
Thank you for sharing that insight. I'm hoping that people on the call are willing to actually check that out. I would say that this is pretty revolutionary for the automobile industry, especially in Nigeria, and I think it's something that a lot of people have been waiting for. So it's good to see that Autochek is pioneering that or championing that this year, especially. Okay, so I want to move into some of the audience questions that we received when people registered for this conversation. So just going back to the conversation about early stage startups and what they should focus on, someone's asking what key metrics you believe from your own experience, what key metrics should early stage startups be obsessed about, especially in that beginning phase, in that the growing phase is a bit like awkward. There's a lot of teasing that goes on. So what should people be focused on and learn until they come out of that?
Okay, so number one is growth rates, not growth. So in your early stages, you should be growing faster, right? Because if you think about it, if you have, so there's, and the thesis behind this is basically, if you have a great product, right? I'm not a very big fan of heavy discounting for customer acquisition. I think that if you look at the most fundamental products to you have no problem basically exchanging value for that service or product, right? And so the key thing basically is the ability to be able to refine your product, spending time, first of all, refining your product or your service offering in a way where that product or service offering is valuable enough to an individual that they're willing to part with some kind of monetary value or service in exchange for what you're doing, typically commerce. Now, if the service or product that you're offering is really good, there should be a natural process of word of mouth recommendation from someone who enjoyed your product or service. So even if you're spending a little bit on marketing or pushing your product, there should be a natural process whereby someone simply enjoyed that service and will recommend that service to another individual. What this basically means that any product that you launch into the market organically should be growing at a rate where there's a lot of referral. And so that is a sign. If your product isn't growing in a way where if you're stagnant in the way you're growing, then there's a fundamental problem with either the way you're communicating how the product works or typically how your service delivery is done. The other thing I would look at is your customer acquisition cost. If you look at your unit economics and you basically are spending too much to acquire a customer, then there's a big problem around the kind of product offering that you have and the real value that you spend. So your customer acquisition cost has to be designed in such a way that the amount of money that you spend as a business to acquire one customer is commensurate for you in a way whereby you can scale. Now, if you don't have what I would call an affordable customer acquisition cost for your business, it means that as you scale, your business fundamentally will reach a point where you can never achieve profitability simply because you don't have the right kind of metrics around your acquisition cost that can cover, sort of the kind of margins that you're making. I would also say typically, we also look very closely at, it depends on how you measure it, but either the customer effort score or NPS, right? How are customers willing to promote the service that you have? And this is a sign about the quality of service that you're providing. If you're finding that you have a lot more detractors than promoters in your business, it means that you have to focus a lot on the customer service, on the customer delivery. And once you fix all these things, right, and you start seeing that your customer acquisition costs are good, your NPS variables are good, your customer acquisition cost is good, your NPS variable, and your growth rate, you would naturally see that your growth rate begins to improve. And that's typically where you want to be. A lot of the products that we use, WhatsApp being a very good example, never saw an advert. You never saw an advert anywhere. Someone recommended it to you, it spreads across the board simply because of how useful it is and how valuable it is. And it becomes people become more and more dependent on it. So I like to think of our product in a way whereby, how can this product just be seamless? So whenever we deploy anything into the market and there's no real movement, it simply tells us that, well, we're not really providing that much value. So how do we refine our product to a way where it actually begins to provide value and it impacts the lives of people that are actually using it?
Very cool, very cool. I hope that was really helpful to a lot of people here. I want to jump back into our Q&A. I have a question from Momodu, and he's asking, how does one access finance through grants and loans for a startup like mine? It is Cabal Communications, a multimedia content creation outfit. So he's saying that after COVID happened, there was some sort of financial issues. So the question really is about, I guess, from your own experience, how does one go about accessing grants or loans for a startup?
Well, I mean, there are a lot of, I would say, developmental agencies that have support programs of various types, gender-based, industry-based development programs. I think it's really spending time, first of all, interacting with a lot of the development agencies like the World Bank, UN agencies, country-based development agencies like the CDC, things like that. And even, your local government development agencies that are industry-focused. There are a lot of grants and loans that are available across the board, if that is what you're looking at. And I think it's typically going through the requirements to understand how accessible they are. In fairness, some of them can be quite tedious in terms of going through the process of application. But if that is the focus that you want to take in terms of applying for grants, you typically have to be what I would call grant hunting, right? You're searching the internet, what grants are available every day. You have to do a lot of the work around, various grants for various things come up every single day. And you're not, it really is around how much search are you doing to identify what's available and if you qualify. So I would advise that you spend a lot of time on the internet, going through, researching, figuring out who is disbursing what are the hot sectors, what are not, looking at newspaper articles as well, trying to understand what governments are saying, what industries are saying, what people are saying about where they want to focus on. And then, making an attempt to get some of those. In terms of loans, it will typically be looking at more or less the same process. Institutions that are providing loans towards businesses that are starting up, that tends to be fewer, right? Because, especially across Africa, you find a lot less people that are, I'll say more risk averse to providing SME with startup funding, especially around the debt side, because you're most likely not going to be a place of profitability. But in fairness, there are various loans that are available. I have seen, for instance, in Nigeria with the LSETF, CBN has been granting quite a lot of loans as well. The BOI has been granting quite a lot. And I know people who really literally went through the process online and got disbursement, right? So I think, really some of these things, yes, there's a lot of doubt, but if you don't try, you don't get it. You don't succeed. And even if you don't get it, you get a lot of learnings in the trial process. So go for it.
Yeah, I agree. Grant hunting is a thing that needs to happen. There are a lot of organizations that are now setting up, they're setting up outfits essentially to help early stage founders gain access to grants, to loans, to the capital that they need to grow their business. I know that Google has that as well. Magic Fund has that. So just important to do that search. Got a question here, a really interesting question from Ucha, and they're asking, how is Autochek able to deal with the challenge of declining income for the middle class, which may affect demand and electric motor vehicles that are here to stay? Does the business have a strategy to get more affordable versions than Tesla for the market? Do we have the roads for Teslas? I don't even know, but a good question though. We do have to keep in mind that there is that declining middle class, especially in a country like Nigeria. I don't know what it's like in the other markets that Autochek is operating in, but yeah, what are your thoughts on this?
So I think, take a step back, right? I think the largest or whatever wealthiest man in Nigeria, Dangote, I think his business started in 1976. So if you think about the fact that his business started in 1970, he started business, like I think his business he started doing business in 1976 or something like that, his trading business. So if you think about the history of Nigeria and what he's been through, so his business pretty much started around the same time when Nigeria was in a civil war. If we count the amount of coups after that, we probably had, 76? There was one in 83, 85, 1990. So maybe you're talking about 5 coups in between. Then let's talk about how many protests, right? From then, right? Ali must go, blah, blah. June 9, 1990, whatever. And 1990 also truncated elections. And then you talk about banking crisis, early 90s banking crisis. So we've not even come down to, and then we talk about SAP, right? And how that pretty much wrecked everyone. But then there was an economic boom, post 1999. And so if you realize, if you look at that, right, when you look at the way you deploy business, you can't typically go into a business and, 5 years ago, 6 years ago, Nigeria was growing at a rate of 7%, or I've been growing at a rate of 8% year on year from 1999 up until 2015. And economic booms and busts or economic cycles, valleys and dips, valleys and tips are very normal. So the fact that we are having a declining middle income, your business has to be able to absorb shock. Whether we like it or not, at some point in time, some economic policies will improve, segments will grow, middle class will continue to grow again, and that's just how an emerging market develops, right? So you have to realize that as a business, it's not because you have the first layer of shock. Yes, you have periods whereby your business might not grow as quickly as it did because of the economic indices around, but also fundamentally, your business has to be able to absorb these economic shocks, right? 2008 economic crisis, global economic crisis, businesses are still doing well. Apple, Tesla, companies that are still doing well at the end of the day, right? So you have places whereby your sales might dip a bit, but you have, if you provide the right kind of business and you provide the right kind of service, even if there's a decline, at least your sales will not decline to a point whereby your business shuts down, right? And this is where, it's a market of competition. You have to also be in the market to provide great service. So I think that looking at it from that perspective, we see it as well. It's an economic cycle. We're not the first business to go through an economic cycle, and across the continent, for instance, Egypt today has been defined as the most attractive destination for investment. 5 years ago, they were going through a crisis. There was no investment going into the country. Today, they fix things. They are the most attractive destination for business. 11 years ago, Cote d'Ivoire was going through a civil war. Today, it's one of the most attractive investments, growing at 8 to 9% year on year in terms of their GDP. So, I think, one goes down, another goes up. You have to play the piano. You play your tunes accordingly.
Yeah.
You have to build your business to be able to be resilient to shock.
I love what you said about how in different markets your sales may increase or your sales may dip. I think what's important is you're right. You're building a business that's able to absorb as much of this shock as possible, right? Whether you're dealing with a pandemic that started in 2020 or anything else. And I love that you mentioned Egypt, because we also feel the same way about Egypt, that it's very prime for investments, and I actually see the economy really growing at a very accelerated rate in 2022. Thank you for that. I have a question here from Babatunde Lawal, and they're asking, how do you structure a company as you expand into other countries, especially if you have to set up offices and ground operations in every country you expand to? That's a really good question, because it's very operational expanding into another country.
Okay, so depending on the type of business that you're doing, what I would advise first of all is benchmarking, right? Who is similar? What are they doing? Or if there's a similar startup that's like yours that has done the same thing. So the great thing is that there's LinkedIn there now. If you want to, you can reach out to anybody you want to learn some of these things. So we found a lot of value in doing a lot of research in how companies are structured at an early stage. So I'm not coming from, what I'm trying to say, I'm coming from a perspective whereby a lot of the things that we've known or implemented are learned, right? So just everybody starts from a base level where you have no knowledge about it. Now, looking at your industry or your business, you have to be able to, first of all, benchmark to figure out what are other people doing in the space and how can I apply that to what I'm doing. So that is my first place, is if you can benchmark, or you can take an approach whereby there are people that you can look at what they're doing, or even ask questions around how they're doing it. It provides you with a lot of first-hand knowledge around how you would approach this from your own perspective. In our place, from our perspective, what we typically do is we believe in the leadership, the initial leadership as the driver, not necessarily our ability to execute. Because when you go into every market that you're not common with, in a sense where you don't have, your home market is where you have the best knowledge. And of course, as you expand into other markets, the further and further you go out, the more limited you are in terms of natural knowledge around the market. So it's so important that you invest in the leadership that is going to drive that market, right? I think the first big failure is when you don't invest in the right kind of people, because then that market is then relying on your limited knowledge for growth, as against it being the reverse, where you have knowledge, you have someone that has knowledge about the market, and it's now about how do we execute on our product, right? And so I think that is the first point, is who are you investing in terms of how you go. In our case, we're lucky enough to have a very fantastic colleague that's in charge of our expansion. So what we typically do is we do what we call a market assessment, where that individual will go spend time in our market to understand, typically, we have a core product, how does it work within the market? So that individual will spend, he's our SVP of expansion, remarkable individual in the execution, and will spend time really understanding. And then he comes back basically within a month or two of spending time in the market, we'll come back with what he will call his launch plan, or his idea around the launch plan. In the process as well, he's able to spend time with people who we consider to be potential hires, because you don't have also, the key thing about remote markets is that they're not going to have the same benefits that sort of an HQ and that benefit, right? So that individual has to be able to do a lot of the things that you're used to doing with your larger team alone. That individual has taken and deploy alone. So we spend a lot of time with them trying to understand and build that culture, and also culture transfer is very key. So once we're able to identify the right kind of people, and we understand typically what the launch plan for the market, that launch plan would also be defined by the structure. So we don't typically take an approach whereby it's a one-size-fits-all. I mentioned to you, various markets that we operate in have different kind of laws that govern them around financing, that govern them around vehicles, registration, title transfer, even things that are important to us like recovery of cars in terms of default. And understanding all those things will now determine the structure that you're applying, inclusive of also the growth rate as well. So you look at the market, how much should you even invest in this market? How viable is it for you to invest in it? Yeah. So we take all this, and this determines what we'll call our startup structure. But I think, like I did mention, one is key research into the market, and two is basically the kind of people that you're going to rely on in setting up that market. The second layer of that is what you call overall supervision. We take a regional approach from a start perspective, whereby we have regional leaders that oversee specific regions that we operate in. And our goal basically of strategy across expansion is really fundamentally based on establishing in what we call key market nodes. So where you have economic powerhouses in each. So for instance, in North Africa, the economic powerhouse from that perspective would be either Egypt or Morocco. In West Africa, of course, is Nigeria. And then you have Francophone West Africa, which would be Cote d'Ivoire. In East Africa, it's Kenya. In Central Africa, it would be DRC. And in Southern Africa, it would be South Africa. So the key strategy for us is establishing in those key nodes where, and basically from those key nodes, you should then be able to define a very localized regional expansion strategy. So that's kind of how we look at our expansion across the board.
That's a really good point. So for early stage founders who are still developing their team, right? Because you talk about that, the importance of having someone actually be on ground to sort of scope the area and to obviously interact with potential hires in that country. So would you say that it makes more sense, or it's wisdom for early stage founders to wait maybe till their team grows to a certain extent and they're able to send someone out to then sort of survey the land and say, okay, this is what we should do, this is the plan? Because I don't imagine a scenario where a small team is able to afford to send someone out while they're still in their growing stage. So is this something you recommend maybe after some capital has been raised and there is enough money to do that, or while the company is still being bootstrapped?
So not necessarily. So why I described that, what I was actually defining was the importance of an interpretation of the local nuances, recognizing that it's a big error to define your entry strategy into a market without having any core knowledge on what's on the ground. Now, there are a lot of ways you can do that. In our way, we have someone that's focused on that. In other ways, you can form partnerships. There are people, for instance, who might not necessarily be a direct employee, but you could form a partnership with someone where they would help you basically be able to scope out and do all those things, but there's a benefit they get. They might not necessarily even be an employee. There are also cases whereby you can look at co-founders who will drive this, depending on how viable the market is. So I think it's not a limitation of money, it's a limitation of how valuable is that step for you, right?
Yeah.
If it's valuable for you, then there are certain things that you can do. If it's not valuable and if it's really just expansion for the face of it, then maybe you're not willing to invest resources. But if it's something that you really think is fundamental to the growth of your business, there are a lot of ways you can go around finding remote ways to understand how a market is and incentivizing people to be able to play that representative role for you, even if you don't have someone who you're necessarily funding to be in that market or pay or having to cover the cost for that.
Partnerships are huge. And also to just add to that, a lot of other African countries have incubators and hubs filled with people who are more than happy to partner with you or even to let you know what's happening in their country, which regulators you should speak to, what you should know. So that's also another opportunity that you can tap into. I have a really interesting question here about regulation. Are you open to talking about regulation in your industry? Yeah. It's a safe question. So this is from Adekoyejo, and they're asking, regulation has always been an issue for innovators in Nigeria, especially for fintech companies. What body in Nigeria regulates your business? And are there some regulatory issues you have faced in the course of your business? And how have you been able to manage them if you have faced them?
Well, we work very closely with, so we work on that two forms, right? One is that we work directly with banks who are regulated by the CBN. So we are subject to that regulation because there's nothing that we can do that is pretty much outside of the, you would say, financial lending laws of any market that we operate in, right? Because we're working with financial services providers who are indirectly subject. And there are certain things that we must do to become partners with them because they have a roster whereby each of the partners must go through certain things to actually have an established relationship with them. So there's a lot of KYC that goes into establishing the partnership with the financial institution, for instance. On the other end of it, in every country, there are bodies that regulate, I would say, everything from sale, importation, and manufacture of cars. In Nigeria, it's the Automotive Development and Design Council who the fundamental policies that they drive are basically the age restriction of cars that can be imported into the country, the type of cars, the condition of the vehicles, that can be, and things like that. We're also subject to change of ownership laws as well. What does it take to register our car? Who is the owner of that car? And then we're also subject to things like loan recovery laws as well, across the markets that we operate. So I think that regulation is regulation, right? Engagement is important. In some cases, it's a bit tricky in a sense where, okay, look at it. Look at what's happening in China, for instance, right? 5 years ago, oh wow, the Chinese government is supporting tech industry so well, blah 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 blah. In the last 2 years, there's been what you term a crackdown on the tech industry. I was actually reading up on a talk that Scott Schreiber of Tiger Global was saying, because they have one of the largest investments across the continent, across China. And that's pretty much where they build their portfolio from. Really, a lot of early stage investments when China was just coming up. That's really where Tiger Global built their name and record from. And he basically was telling a lot of consumers that they never went in from a perspective where they assume that these sort of things will not happen. I think you have to assume that when you're operating in emerging markets or frontier markets, where regulatory in itself hasn't reached a stage where the economy isn't, I would say, mature to a point whereby institutionally, there are some things that are just, standardized across the board. You're always open to that risk. I don't think it's a Nigerian problem. I think it's an emerging market problem. There are regulatory issues in India. There are regulatory issues in South Africa. There are regulatory issues everywhere. And another thing is when you have kind of like government changes, right? You're subject to that. Once again, your business has to be built. If you're building in an emerging market, you must be able to withstand shock. And you have to think about the kind of products and services that you're developing, so that in the event that, these are just the realities, right? In the event that one thing goes down, the other goes, and you also have to be conscious about regulatory gray areas and be very comfortable with that. If you're operating in a regulatory gray area where there isn't any policy at the moment, right? But a policy basically comes up. For instance, in Kenya, the president has just signed in a new law for digital lenders, right? And basically has given everyone that's lending digitally 6 months to basically comply to a certain amount of laws. Now, prior to that in Kenya, there wasn't any real regulation around it, and there was a lot of encouragement. But what then happened was that there was a lot of what you call consumer apathy, and I'm also seeing that trend, right? It's also happening in Nigeria already, where there are beginning to become a lot of complaints around predatory lending and things like that, right? So right now, it might be a regulatory gray area, but if you're operating in that area, it's important to understand that there's a risk factor that's driving that, right? And so you begin to also kind of ensure that you are, in a sense, self-regulating, right? So I think the first point comes from being self-regulated, where, okay, what is a standard benchmark by looking at the overall financial industry and saying, okay, what are the things that we need to put in place? The other thing is, what are your hedges? I think that's the reason why emerging markets pretty much have high risk and high reward. And you can't have the kind of growth rates in businesses that you can have here, that you can have everywhere, because there are those opportunities, but those opportunities also come with, its own mix of challenges. And I think it's just typically how you deal with it. You're never going to have like a bed of roses. If it's not going to be one challenge, it's the other, right? And it's simply how you navigate them.
Yeah, good point. Really good point you made. So there's going to be a poll that's going to come up in a few minutes in a few seconds, excuse me. And the poll is connected to some of the things that have been shared on the call. So if you've been listening, you're able to answer. There's only 2 questions. Yeah, it's 2 questions. So while that poll is being answered, I have quite a bit of questions here about the loan process for these brand new cars. And someone is asking, how much do you guys make from that process, and what the interest rates are? And also somebody asked a really good question about securing the loans to mitigate default, being that cars are movable assets, right? Are you willing to take any of these questions? Yeah, there's some flexibility, loans as well, interest rate and percentage, and then also how, I guess, you guys will make revenue off this too.
Okay, so I'll say rates are really determined by the financial services providers. The rates are around it's a mix between the actual individual that is applying for the loan or the business and their risk profile. The rates are variant depending on the bank, depending on the financial institution. They will determine the rates that they will offer to the consumer based on their risk profile. So we can see anything from, on our platform today, we have some financial institutions that are offering, depending on your credit profile, as low as 17%. And you have some financial institutions that are offering 30%, right, per annum, depending on your risk profile. So that varies. And that's the beauty of our platform, is that you actually, depending on your risk profile, you get various offers from various individuals and various tenures. So you have that independence to select what you want. How do we make money? We typically charge services, and the amount that we charge are enough, I would say, to keep the lights running. In terms of risk against mitigation, yes, they are movable assets, but for us, the assets are tracked. And most of the individuals typically that we deal with are, a lot of it has to do with the risk profiling and the underwriting process. If you underwrite people who typically have a certain type of job, are doing a business and have a decent type of income. I'm not talking about having to work in the oil and gas sector, right? Just ensure that if you're doing a genuine business, it doesn't really matter what it is, but you have regular inflows. If you're selling on Instagram, you have a registered business, it's coming through you're receiving inflows to your business. It's that kind of people, they just want to see. Most of our lenders lend based on the cash flows that are coming into your account. Are you actually actively trading, right? So it's not something that is restricted to very high-end workers or anything. Our underwriting process takes into consideration a lot of things around your financial behavior. It's not really around the quality, and we have all sorts of people that are accessing it. So if we can fundamentally tie your financial behavior to a regular level of income, right, then you're very likely to get a loan, because we can see history that you're actually going to be able to pay. The second thing basically would be, are you over leveraged with the kind of car that you're trying to get? So for instance, you can only afford to drive a Suzuki Avio, but you're trying to get a Bentley, right? We would advise you, hey, look, your income, it's not that you're not a Bentley person, but your income is not a Bentley income. So we will need to match you to your inflows, and then you get that done. So I think that's the underwriting process itself is the big risk mitigator. And then the process of, and so from a recovery perspective, you know, if you're taking the loan really for productivity, nobody wants to give up that car unless they're in a really terrible situation, right? So what you find is that, and this is what we found as well, because it is so important for productivity. If someone takes a loan to improve the delivery of their business, and they are really running a fundamental business, if that business has been properly underwritten, then that individual shouldn't have a problem unless there's a general shock. So you would find fewer cases where, you know, people are not willing to negotiate or ensure that they make the payments when they can. So we have a lot of financial institutions that are typically trading with us pretty satisfied with the process, because typically the segments that you're applying to are, you know, it's not an unsecured asset, and it's something that is typically serves people who are, I would say, in the productivity sector.
Thank you for shedding some light on that. I also love what you said about being able to, it's just a function of how active is your account, right? And can you actually afford to pay off the loan that you're getting? Not for any reason except, you know, the people on the other side can clearly see that, okay, if you try to go for a more expensive model, quote unquote, maybe you might default compared to if you go for something that's really within your own like budgetary range, excuse me. So we have 5 minutes for Q&A, so I'm going to just take a few more questions here and then we'll let you go. So let me just pop back in here. I'm hoping that, okay, I have a good question here about government policies and how they play in your industry. And being that you're one of the key stakeholders in this automotive industry sector, I mean, how would can you speak into the role government policies play in your industry, to how it's directly affected your business, and if there's anything you would say specifically to the Nigerian government about your industry, what would you say?
So, I mean, I think that government policy affects every industry. That's why it's government, because they're supposed to create policies that affect every industry. I think the government that we have today is very clear around its policy on ensuring that we have much more local production and local manufacturing. I think with that in mind, it's very important that we're also aligned to seeing how we can support people who in our industry are locally producing. I mean, fundamentally, I don't think it's even just necessarily needs to be driven around government policy. I think that as a people, it's something we need to fix, right? You know, we have a huge consumer base, and this is a potential gold mine, right? In terms of human resource, even for the country, in terms of taxable individuals and what this can do in terms of our overall prosperity as a nation. And so getting people more productive is so important, right? If you look at the average tax per head, right? We're doing an analysis on the in terms of Lagos tax per head and London tax per head. It's something like, if you look at the population, it's like $150 to $15,000, right? And that is a function of the productivity per annum, and that's a function of the productivity of the individual, not because you're less hardworking or anything. It's just the environment, right? So I think that it's so important that we look at that, not really from a goal, but it's difficult to get there, and it takes time to get there. And so our focus basically is, and that's why, you know, what we've just done, right, for instance, in terms of the brand new segments, because of the brand, a lot of the brand new cars today are being locally manufactured. And yes, there's an incentive for people to go out and get the Tokumbo cars. Some of them are much more. Like I said, if we don't start the steps by saying, okay, can we get the next 10% of people who can afford to get these cars accessible loans so they can start driving? If we don't do that, we're not going to be able to even go back to the table to sit down and say, look at what we've achieved. How do we improve on that, right? And so for us, it's really supporting it. And you know, we're keen on seeing more and more local production happening, not just in car manufacturing, but also in parts, assembly, batteries. There are a lot of things that I think, and you know, we're not coming from a place where these things are new. In 1976, Nigeria was producing 160,000 vehicles. Land Rover was produced in Nigeria, batteries, you know, you had all these things happening, right? And we didn't even have a policy at the time. So it's not like it hasn't happened. It's not like as if these things, you know, are new. It's just that over time, they've declined. So we do have the ability as a people to be that productive in terms of these things happening, right? So it's just kind of finding where that mojo, finding that emo, and tuning back and getting us back to where we can be. Because it's not that it hasn't happened, it has happened, we have existed, we have produced up to 160,000 vehicles, so it can be done.
Thank you so much for sharing that. Got an interesting question about your presence in northern Nigeria. Someone is asking, Mr. Umar is asking, why Kaduna and not Kano, where there are huge numbers? Was it a data-driven decision to go to Kaduna?
Absolutely, absolutely. So it was basically more around the internet penetration. So our business is very highly driven by how many people are willing to go through a process of going online, making an application. And that's where we talk about our initial investment, right? We saw that there was a lot of demand coming. And that's the reason why, we followed the data that was coming in. It's not like we don't believe that Kano is a far much more viable, far much has higher viability in terms of a commercial capital in trading in itself. But what we found is hardly cash-based, and also not a lot of internet penetration as compared to Kaduna in itself. And that's why we chose that was the first point. As we develop in the market and as we reach saturation, we naturally would expand into other parts of northern Nigeria, but it's a gradual step. But we have to go with what we call, what are the first hotbeds, what are the most, where can we get our highest rates of return? And then from there, we then move into other segments. So we are coming in due time.
Thank you so much. This really was a very insightful conversation. You brought a completely different perspective to this sector, to this industry, and we really appreciate you. Thank you for coming on. Do you have any final comments that you'd like to share, any last words you'd like to share before we wrap up?
No, I mean, I think it's a very exciting time for tech. Having sort of been lucky enough to see sort of the transition over time, I think it's a very, very great period for technology. I mean, I would encourage a lot more people, we're seeing a lot of people make crosses from more traditional sectors. I think there are a lot of problems to solve. A lot of things that we see around us are really opportunities that are waiting for tech to basically intervene and create massive opportunities. I think that across Africa, our biggest problem is job creation. Our biggest problem is wealth creation. And technology affords us the opportunity to be able to use the internet as a way to get jobs into people's hands and get people more productive. So I just advise a lot of people that are listening out there to really look at the sector as something that is here to stay and make a lot of investment into the growth and development of the sector. And yeah, thanks. That's really what I want to say.
Thank you so much. Thank you for joining us. Thank you everyone for joining us. We have come to the end of this episode of Building from Ground Up. Our next webinar holds on January 14th. That's next year. So please save the date. We will let you know who we're bringing on. And if you follow us on social media or on especially on LinkedIn, we will put that information out there. And we appreciate the UK Nigeria Tech Hub for putting this event together. We appreciate that they are an initiative that is very, very interested in supporting the growth of the technology ecosystem in Nigeria, stimulating digital economies and supporting sustainable growth. Please, if you'd like to learn more about how the UK Nigeria Tech Hub is helping to drive our economy as well as other economies in emerging markets, please look them up. They're on social media, follow them. I'm sure they'll be more than excited to hear from a lot of Nigerians, especially Nigerians who attended this session. Once again, this is Tech Cabal. We are an African media publication. We report technology and business news, and we're very, 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 very interested in amplifying the voices of entrepreneurs and founders, such as Mr. Ikpe. We're interested in amplifying what they're doing in the market, how they're helping to move the needle, how they're helping to drive impact and growth in the Nigerian ecosystem, Nigeria technology ecosystem, as in the case of Autochek, obviously in other African countries as well. This event was put together as far as setting up registration and everything by the Tech Cabal Insights team. TC Insights is Tech Cabal's data research and intelligence unit, which provides actionable data on startups and the tech ecosystem across Africa to investors, entrepreneurs, big tech companies, regulators, and other players on and off the continent. You can reach us or reach the team, tcinsights@techcabal.com, or visit our website, techcabal.com/TC Insights. And then we have a very, very wonderful newsletter that is very widely loved called TC Daily. It goes out every weekday at 7 a.m. It's pretty great. It's actually written by our chat room moderator, Timmy, and he's very witty, but also very, very, very informative as well. So if you'd like to, find out what's happening, 7 a.m., which is give you a lowdown of what's happening in the ecosystem, technology, and business news, please subscribe to our newsletter. And then finally, if you'd like to find out where the UK Nigeria Tech Hub is, please follow them on social media. They're on Twitter, they're on Instagram, and they're on LinkedIn. Thank you again for joining us. If you have any feedback, any comments, please send us an email to team@techcabal.com, and somebody will respond to you. I think that this episode will be made available online. We'll let you know when, but just give us about a week or so, and just to get back to everyone. We appreciate the comments. We appreciate the questions. Thank you again for joining in, and have a wonderful morning, or afternoon rather. Afternoon now.